One
Hello, hello,
zero.
mate.
G'day, g'day.
How
Ho,
we
ho,
doing? All right?
ho. Having a fine old time. Hey, this is the
Oh,
last show of the year, buddy.
it's the last show of the year. Yeah, the last US show in history as well for us. Be all UK next year again.
History. We've made history again.
Well, everything we do, everything we do.
Incredible, isn't it?
So I'm not sure if everybody's up to date with it, but we'll wait for a few more people just to come into the room and we'll talk about it all then. But
Yeah, we'll have a chat about that a bit later. We've had a few things happen, mate, for the last week of the trading year per se. Well, it's not really, but it's the last year for data releases and things like that. So I thought we'd just have a quick squiz at the posted numbers to date. And you know what? We've had FOMC, we've had the BOE. Oh, we haven't had the BOJ yet. That's tomorrow. But I haven't seen either of those statements. Have you read them?
No, I haven't, mate. I haven't had the chance because we're in the other show. I did listen to Jerome Powell yesterday, and I thought it was quite interesting. And I've got to be honest, I thought it was quite interesting the market's reaction to that particular speech as well. I thought there was a hawkish tone underlying all the dovishness. So not massively surprising that we saw the dollar not strengthen significantly, but it's a little bit of a surprise that we've seen, the fact that we've seen the euro pop to the upside again, gold pops to the upside again off the back of it, because what Jerome Powell said was that things were going to be left as they were. However, things are improving in the U.S. economy, and what he would be looking for is for the picture of the unemployment data to change and the picture for CPIs to change, which he says he would believe would be around about the middle of next year. Now, considering that the price of the dollar in comparison to many other asset classes right now, there are going to be people looking to position themselves ready for next year, because people don't trade. The big guns, I mean, the big institutes don't trade about what's happening today, tomorrow, or even next week. They're looking to take advantage of a decent price that will likely change over the course of the next 3 to 6 months. So I do think a turn is coming in the dollar, and what I heard yesterday would suggest that could well be the case. I think unemployment figures later today will potentially spring the dollar back to the upside, but we'll have to see, because I think we really do need to focus on now. And this is the great thing about listening to the central bank speeches, is that they tell you what they're looking for that will drive our trading decisions into buying or selling a particular product. So if you go back and listen to Jerome Powell, and there's the 89 level there that I'm after.
Yeah, we've just got to wait, haven't we? I mean, technically, we just can't buy into this until there, surely.
Was it 89? Yeah, 89 looks really good to me. So maybe slightly weaker employment figures today would drag us down there. I don't know, but I'd like to take another position in the euro dollar if we can get to that 89 level. It looks like a decent level. So I'm a buyer of the dollar and a seller of the euro effectively. But the unemployment numbers are important. But just back on the point of, if we listen to the central bankers and allow them to, or let them tell us what they are looking for, it means that we can really kind of start ignoring the noise. So we know right now that we're going to put less emphasis on retail sales. We put less emphasis on housing starts. We put less emphasis on building permits. We put less emphasis on manufacturing PMIs and services PMIs. To a degree that everything kind of gets its position. It's about the employment numbers now in the US. If the employment picture starts to improve, I think we do start to see people come back to the dollar, and particularly if we see the employment figure and the inflation numbers start to improve, then we really do see things. Steffi, the reason that I wouldn't be so, I mean, it's not that we don't bother with them at all. It's just that they don't have the same weight anymore, because Jerome Powell told us
they
don't.
What they're looking for, yeah.
No, what Jerome Powell needs is for the because what's going on right now is that they're buying bonds, they're buying government debt, and for the US dollar to improve, one of two things needs to happen. Either they raise interest. One of three things. Okay, I'm going to name the two.
You forgot miracle.
They will either keep. They will either raise interest rates. That's going to put the US dollar up. They are going to curb back the bond buying purchases. That's going to put interest rates up. That will be bullish for the US dollar. And what he said was, for those two things to happen, they need to see a better employment picture, and they need to see inflation come back into play as well. Now, you can see with the oil, the price of oil, it's the price of oil that changes the inflation picture. So, he was talking about middle of next year for the CPI numbers to get around about the 1.3 level, and looking right out to the end of the year to get up to 1.8. Now, they're always after that 2% area to start controlling inflation. But you can guarantee that the first thing that there's likely to happen is probably the lack of asset buying. They probably won't do so much debt. They won't buy so much debt from the US government, and that will boost the dollar. So we're just waiting for information that he said would form their opinion that they should stop doing it. And he said it's about employment, and he said it's about inflation. So we look at CPI data, PPI data, and we look at employment numbers, and that will tell us all we need to know about whether we should be bullish on the dollar or bearish for that matter. Now, every central bank is different. But given the fact that there's unemployment figures that are way out of control in just about every region and every economy, certainly every major economy in the world, they will probably all be looking for the same kind of thing. Now, manufacturing and PMI data, it can change the employment figure, but it's not going to be binary, because what might happen is that those services and those manufacturing numbers may be improving because of better management of wages, better management of pension, things like that. It might not be because they are actually growing they're not actually growing their businesses, so they need more people employed. So we've got to be careful that we don't just go, okay, well, this is a zero-sum game. If this rises, this rises. It won't. It's not always going to be the case, because as we've seen, the services and manufacturing PMI data has actually held up really well, but the unemployment data hasn't. So what's been going on is some pretty aggressive accounting. I would suggest that seems to be what's the case, is that they are cutting back, and their growth is probably more down to the fact of decent management and cost cutting rather than it is for growth. So
great numbers out of the Antipodes this morning.
Yeah, very impressive, mate. Very impressive. Yeah. So GDP data from New Zealand is rocking right back to where it should be, and this sort of thing, GDP is obviously going to be incredibly important, and that's where it all will lead us. And we want to see the employment number change there. But look at the unemployment number in Australia. Very impressive, and really, it's just getting a bit more healthy there, isn't it? That employment change of 90,000. They were looking. Sorry, the previous was 180,000. So there's a bit of slowing there, but there's an inevitability about that as well. But we're going in the right way, and
no surprise that the Aussies taken off on the back of that.
Expressed in the chart. Yeah. So
what's more interesting than that to me?
What's that, buddy?
It's this chart here. Hasn't rallied against the Kiwi, which is super interesting. It did, but then bang, came straight back.
Yeah.
Which relative strength wise tells me the Kiwi is going to have a little bit of a good time.
Yeah, it does actually, doesn't it? It does suggest that, and I guess a difficult one to trade in many respects, because they are both in probably the more enviable area. The one thing that is hanging over Australia, of course, is the
China.
It's the spat with China. That doesn't seem to be going away, and
no, it does not.
It would suggest that New Zealand would be a better play. What I also find is quite interesting about New Zealand is the way their economy is. Their economy very much is based on tourism. And how is that working out? Are people allowed into New Zealand right now?
No, I wouldn't think so. Internationally, no.
Yes, it's a
I think
strange
there's a
one,
bubble
really.
between. No, there's no bubble. There's a bubble between Australia and New Zealand, but it's only one way. Kiwis can come here, but we can't go there.
Yeah, yeah, it's a strange one. Definitely a strange one. Yeah, Shukri just saying that Ethereum is pumping, and I am in Ethereum, so I'm very happy about that. So I've got a couple of positions in Ethereum. In fact, I've got 3 positions in Ethereum. They're all doing very well. And I can also tell you that Cardano is also pumping as well, which is going great guns. So I've got some nice trades in the crypto space right now, mate. So that I'm really happy about.
Awesome.
The gold trade, obviously, everybody will be pretty happy with how that's going too, because there was some people that managed to trade that. I chose not to in the end.
Oh, and Bitcoin's through the roof. Broke the ceiling.
Bitcoin is. I mean, it's absolutely flying. And relatively speaking, what we got, yeah, I mean, they're both. They're probably there on about equal performance in percentage terms. I would have thought. I will double check that though. Bitcoin up 8%, Ethereum up about 4%. So actually, Bitcoin is outperforming today. So yeah, Bitcoin flying, Ethereum flying. In fact, I'm sure the crypto space generally is doing pretty well. So well worth holding onto those positions. Hopefully, Sai, did you manage to get your Cardano? I know you were gonna flip your position away from. Was it DOT you were in? You managed to get in some Cardano, mate. Hopefully you did. Like in that space. But things are looking pretty good. FTSE 100 is a little bit caught up. So the Aussie Kiwi, are we looking for shorting that, mate? Are you long on that one already?
Well, I've been long for, pardon me, for all this week and part of last week as well. That's why I'm looking at it. I'm thinking, when I see the Aussie flying and the numbers that came out of Australia today, yes, Kiwis had good numbers as well. But I don't see Aussie Kiwi rallying. Then you know what I think. If that's not happening, then potentially something else is going to happen.
Yeah.
And for that reason, I think short is probably a good position to take at this point.
Right.
I'm just going to leave my stops where they are. We've taken 2 lots of profit here, so I'm not concerned. But adding a short, not yet. I don't think yet. I've got to see something better than what I'm seeing at the moment. All we really have is 2 doji candles, so there's really nothing to do here at the moment with that. There's also the potential, of course, for this to come back to the weekly pivot, put in a right shoulder, and go bang. I can totally see that as well. But yeah, when I see what I've seen so far today with those numbers and the fact that the Aussie isn't going long against the Kiwi, it tends to suggest to me that the Kiwi has something up its sleeve. And as you said, the Kiwis don't have a beef with China. Speaking of beef, you know, China's slapped tariffs on barley. They've slapped tariffs on in fact, they won't take our wine at the moment because we've been selling it cheap, according to them. They've now banned our coal ships from unloading. They've stopped our seafood from unloading. So, you know, they're really putting the pressure on.
Yeah.
And the Australian government are not happy. And this could escalate into, well, I don't know what. It's not like it's the US versus China, but from the Australian economy point of view and from an Australian dollar point of view, if the Chinese aren't spending whatever it is in billions of dollars, and I actually should know that number, in coal, I think it's something like 50 billion or something like that. If they're not spending that, then they're not buying Aussie dollars, right? Mm-hmm. So if that's the case, 50 billion is not an unsubstantial amount of money, I've got to say, and that will move a market. It will move a currency without question. We're not seeing that at the moment versus the US dollar because the US dollar is so weak. But as you and I agree, I think 89 is the level for the dollar index. And there could well be a little bit of buying coming there. If that's the case, I think the Aussie is going to be probably one of those that crashes biggest against the US dollar for this reason, unless, of course, they come together, China and Australia come together and say, well, okay, this is all BS. You stop telling us what to do and we'll let your products back into our country. And then this, you know, was a spat over. The Australian Prime Minister said there should be an investigation into where COVID originated.
Right.
That's it. Nothing more than that. And
Right.
of course, the Chinese government took exception to that. So propaganda would let you believe, but what other reason could there be? I don't know. The interesting part about the last move that China has made is that they've now stopped coal being unloaded in China. There's something like, and 5 months, I think, was there are ships been out off the ports for 5 months. They can't unload. You can imagine what the holding cost of that is to the freight company, to the shipping company. That can't be cheap. So that's going to cost truckloads of money to keep those boats sitting there. So eventually they're going to have to come home, I would imagine, if they won't unload them. And again, that means that Chinese yuan is not being exchanged for Australian dollars, and therefore there's only one result of that. If coal is certainly up there, they haven't touched iron ore yet, and I've been saying this for months. The minute they start to put tariffs or bans on iron ore, then Australia has got real problems.
Yeah,
because that's a massive. In fact, I think it's something like 10 times coal in terms of exports to China. So it is a touchy situation. It's a dodgy situation. So as strong as the Aussie should be at this moment, I think there is a caveat around that, and it does depend on what this China situation escalates to or not.
Yeah. I mean, Steffi's made the point that with the spat of going on with China, from an economic point of view, will this not hurt the Australian economy? But the FX rate keeps going up, and it's a timing issue, really, Steffi. Is that, and sometimes you don't know when it becomes a real issue, and
forward
when
contracts,
it's just
futures, it all comes into it.
Yeah, exactly, and sometimes these things just blow over. If you remember what happened when we were looking at the trade war with America and the US and China, when it was initially announced, it was a big deal, and there was a massive market sell-off for a period. But then it just kind of went away, and you kind of I wonder whether the market's a bit tired of this stuff, because these spats go on all the time, and they don't tend to result in any significant downturn in anybody's economy. It's just, it kind of irons itself out in the end. Most of it is just bluster. And the perception probably here is that okay, you probably, that there will be people positioning themselves for that very reason, which is why that there are still sellers in the market with the Australian dollar. But by the same token, so you might see other currencies, a little bit stronger from it. But by the same token, the statistics at the minute, if you look at the unemployment numbers today from Australia hasn't been hurt, and we've got to go on the numbers rather than the rhetoric, because the rhetoric will always sound a specific way, but the market, normally will wise itself. It will correct for a bit, and then it normally wise up to the rhetoric, and everybody just goes back to trading what's fundamentally going on. And you can see in the numbers that what's fundamentally going on is that the Australian economy is growing faster than most. So at this stage, there's no real reason to look for the short in the Aussie. For that particular reason, but maybe against the Kiwi might be a bit different, because then because you got two strong economies, then you do have a third reason, if you like, to look for a short in the
There's a point of difference. Yes,
there's a point of difference. Yeah, so we might well see some weakness against the Kiwi, but maybe not against some of the others. We've also got Brexit again, mate, looking like it. Well, they're now arguing over fishing, apparently, and I would have thought that's probably the easiest thing to sort out out of everything. Looks like the trade deal and the offer, the likelihood that they get an agreement is pretty high, in accordance to today. So we have seen the pound enjoy a lot of that particular news. The pound dollar currently sitting at 135, so, or 1359, 136 if you like. So decent day for the pound, decent period for the pound actually, and decent.
We've got breakouts all over the place with the dollar, haven't we?
Yes, we have, mate. Yes, we have, and these are always concerning in many respects, because all of a sudden everybody else is in now. It's like this is where the dumb money starts to come into play, and I'm not talking about intraday. I'm talking about long term. People think they're going to get a long term play on the dollar, but I'm not too sure about that. 13270. Oh, you sold it there. You sold it there. Okay.
Oh, okay.
Have you got a wide stop loss? What's the plan? Let's have a look. Do we think it'll go there, mate? Have a look.
The pound.
Oh gosh, 13270. Okay. $13270. Okay. Yeah, I mean every gap will close, but we just don't know when. Yeah, there is a gap there. You're right. I mean, so my opinion, Steffi, my personal opinion, is that we see dollar strength. So I think it's got every chance of coming down and possibly close. It will close the gap at some point. Whether it does it in the next kind of round is a bit of a question, because 134.60 there's going to be some further support. So but I do think that we're probably headed for some decent moves in the dollar, but you might be waiting a few months for that. It might not be sort of something that you get out of in the next few days. Oh, sorry, Roy, I did see your stuff as well. Let me just get to Roy as well. Roy, can you share your views on copper? Sure. Supply report shows all-time low. Okay, well that would suggest a copper buy. SF, how you doing, buddy? And also about the VIX. Yeah. So let's do the dollar pound dollar first, mate, and we'll get on to these other ones.
Cool. Sorry, do you want me to do something?
Yeah, what's your opinion on Steffi's question about will it come down to 132?
Oh, yeah. Look, that's kind of crystal ball stuff at the moment, Steffi, for me, because I don't understand Brexit. I just don't get it. I don't really understand what is going to come of a Brexit deal. Everyone's saying that the pound will benefit by a Brexit deal. Have we got one? Answer no. Are we going to have one? Answer maybe. Therefore, and as I said, beginning of the week, I just have to stay out of the pound and the euro at the moment, because I can't predict anything that makes sense to me. The only thing I can do is recognize where we are on a chart, and the chart tells me that we've just had a break, or we're currently having a breakout of this horizontal level. Do I expect that will be the case next week? Probably not. Why? Because why would I now think that, and the only thing that can change this, to my mind, is a Brexit deal. Because we've been here since, 2008, that level was established, and we've only been able to get above it once, and we still can't get above it. Now we're having another crack at it. So my answer to your question would be the most likely outcome, take Brexit out of the equation for me, is that we'll come back off this level and settle down into the range again. So that would be in favor of your particular scenario. But honestly, are we in a technical scenario at the moment? Question mark. I can't answer that. I think it's Brexit that's going to
big problem with that pattern as well, mate, isn't there? When I mean, that's an accumulation pattern right there. It's a bit, whatever you want to call it. That's a kind of complex inverted head and shoulders where you got two heads. And we bounced away from that right shoulder, and it looks pretty even in its left shoulder, right shoulder kind of journey. So this is a good time for it to bounce to the upside, and this will be a problem. I mean, as I say, I'm pretty bullish on the dollar going forward, but the pound may be one of those that trumps it because of Brexit, as Geoff says. We don't know how things are going to react to the pound, but the likelihood is a decent deal is probably going to push the pound higher, regardless of all other currencies. It'll probably be a bit of an outperformer.
It may well be. And look, from this chart, if this reverses, it's going to go. It's going to go a fair way, potentially up to here.
Yeah.
And because it's, historically so cheap, once the buyers do come in, they will push this a fair way. If they come in, you've got to take this line into consideration. This line, this trend line, we're looking at a monthly chart here. That's a very, very strong level, and it's at a confluence area right now. So where we are now, to my mind, from a technical point of view, is exactly the decision of the market right now, right here, right now. So if we sustain a level above here, particularly on the monthly chart, then look out. This could well be off. But if we pull back underneath it, then different story.
The thing is, Steffi, the gap that you're talking about, gaps do tend to close, within a few weeks, if you're looking at stocks. But things like that, there are gaps that literally just survive there 4 years. I
think the euro has still got gaps to the high side that is probably 5 years old.
Yeah. But, gap trading is it's a specific strategy, and as I say, it's actually if you trade gaps, it actually can be really good to trade gaps on stocks. On the open, if they gap up, you can trade it back to the gap. But when you see things like this, it could stay open for years. It really could. It may not. You might get enough dollar strength, but the big question though. Are you managing to stay in this because you're using no leverage? Because that seems like quite a long way from 132 to where we are now. Because this might be more about the money management than anything else. If you've put all your faith in this particular trade, then Yeah. Well, do you know what? That's a technical reason. Absolutely, a technical reason to get involved because there's a gap there. I get that. But how have you managed the money? Is this quite a stressful trade? Because you've loaded up on it, because you've had a lot of faith in that gap closing. Okay, no problem. All right. And I asked that, Steffi, because I understand it. I understand that we sort of we put a lot of pressure sometimes on a trade that we really believe in, and we kind of we bankrupt ourselves almost financially, and that can really
bankrupt us mentally. Yes.
Yeah, it can bankrupt us mentally. Okay. Okay. All right. I think we need to maybe have a bit of a session on this, because this, I understand what you're doing, which is effectively dollar cost averaging, but it's not the way to dollar cost average, and I'll go through it later on when we're in the US show. Now let's just look for Roy, because those guys are about to get moved on. So do you mind if I take the chart for a minute, mate?
I think you have got the chart, have you?
No, you've got it.
Have I? Okay. Yeah, sure. While you're doing that, while you're changing over, those of you who are in the YouTube show and not in the subscription area of the US session, guess what? Next week, not next week, next year, this is actually the final US session for Ash and myself. We won't be continuing next year. Why? A few reasons, but primarily because we feel that there are bigger, we have a bigger audience in the UK session, and we've decided to structure things a whole lot differently. The UK session will be from 5 minutes before UK Open to about an hour and a half, something like that. It'll be free, completely free. And we will be having a Telegram group as of next year. Now, that Telegram group will include trade management, trades that we've taken in the shows. It'll also include trade calls. It will also include things like strategy discussions, all sorts of things in the Telegram group, and there'll be details come out to you all about that. I think in the first week of January, you'll get all the details around that. But this is the last US session for us, and as of the 11th of January, we'll be back in the UK slot. Sorry, mate.
Yeah.
Go ahead.
No problem at all. Okay, so let's just quickly have a bit of a run on copper. So the first thing, Roy, if there is if there are reports that there is a supply shortage, then copper, it would be surprising if it didn't move to the upside. But let's have a look where it is technically. I mean, it's got some room as well to get back to its all-time to its high here in 2010. I don't know if that's the all-time high, but that's the high it could get back to. Would we want to trade it here? Well, it's not good practice to be trading in this particular area. What I'd want to do is now this is the thing. If you've got now, let's say Ethereum as an example. I'm gonna use it as an example because it's the one that I've managed to scale into. Okay. If you have got a belief that copper is going to the upside, it gives you some leverage and room on how you trade those moves. So Ethereum, I've got a belief that Ethereum is moving to the upside. That's my, in fact, let's bring it onto a daily. This is my first entry here. Now look at this. This pulls back to this point and I enter again here. I mean, that's a pretty ugly bar to enter on, but it's a pullback. So I'm just trading the pullback. Another pullback, so I enter here. Another pullback, and I'm going to enter again. Now, if you so what I'm waiting for is the pullback, which do happen. I mean, we're talking about a pretty hot prospect right now in Ethereum and Bitcoin, and there are pullbacks. So why shouldn't copper pullback? And it should. So what you're waiting for is a pullback. This would have been an example down here. When it comes back down to this level, then you'd want to be getting in long. So if do more research on it. I haven't done the research on copper, but if it's true about the supply, then that should be bullish for copper. Now the other thing that will be bullish for copper is equities going higher, because copper is associated with growth. So if we see continued growth in the global economy, copper should go higher because of the usage of it. So it's just picking an area to get in. So and I would be really keen to start drawing levels on here and going, okay, well, there's one there. There's a price point. Could it come back down to 25, 26? Yeah, maybe. Okay, I'll watch that one. Here's another potential price point that I'd be willing to trade it. And then it leads us to almost the same thing. Not 26, sorry. 335, maybe it comes down to 330. So between 335 and 330 is my first, the area that I'd first like to get in. As if the fib agrees with it. Fib puts us here. So maybe the first scaling is on 23% retracement at 3.4. The fib also puts us down here at the 3.32. So that looks like the area that I would no longer be interested in, and I want to take a position there. So one here, one there, but not the highs. When it's moving up, the temptation is that you just, there's a fear of missing out, but it's really bad practice and terrible trading. And I'm going to use the word, it's really amateur. And the reason I'm going to use the word is because I'm hoping it will strike home that you just shouldn't do it. You shouldn't do that to be chasing markets that are going, because what often happens is people have a really good idea, they manage it really badly, and then not only do they lose money, but then they find that if they'd entered in the right way, they would have made money because the market was going up. But they crash themselves in because they can't bear to see the price continue to the upside. Don't worry, you got to get your head away from that stuff. If you miss it, you miss it. Because over time, if that's your strategy, you're gonna back yourself into awful corners. So if you're right on this and you've got a really good idea, then if you don't like to wait for chart patterns, just put some orders in or something. And if you're finding it hard to watch to move to the upside, stop watching copper and just look at the price instead of the chart, because you should be aiming for around about, as I say, the best possible price in my mind is around about 3.4. Sorry, the first best possible price is around about 3.4. Next best is around about the 3.35 area. So that's the thing on copper. Now the next thing is the VIX. Yeah, the VIX is kind of interesting, isn't it? But it's dying down again. Now here's an example of a gap, Steffi. See a big gap to the upside. That gap's closing. Now what would be the assumption here is that the VIX starts to pick up after we close that gap, and there are traders that are looking for that to happen. So what's going on with the VIX? Well, this month is going to be interesting. Now, if we think about the seasonal aspect of things that are going on, then we've got, okay, forgetting Brexit, forgetting stimulus and all this stuff, the seasonal suggests that December is a decent month. So if the seasonal suggests December is a decent month for equities, the VIX is likely to, at best, hold and at worst drop. So doesn't look like the right area or the right point to be getting into the VIX just yet, or the right time to be getting into the VIX just yet. But come the end of January, if this is sort of, you know, looking like it's in the same sort of area and holding, the VIX becomes of interest. So that would be my take on the VIX. It's just a bit early, but I know what you mean with the VIX. I think the VIX is showing some signs of life here, but I wouldn't be ready to trade it long just yet. I mean, look at that weekly. Decent bar last week, but it's starting to weaken again this week, and who knows what happens from here. Maybe we end up right back down here. So this one's just wait this one out and just let this one develop a little bit, because you get plenty of time, I think, with the VIX. That area there looks of interest, doesn't it? Around about 19. Around about 19 looks interesting with the VIX rather than here. So that might take a month or so to get back down there and bottom out. And if it does, then we can start to look at trading the VIX long, in my opinion, or S&P shorts, because it's kind of the same play. So I hope that helps, Roy. We got to get out of here. Sorry, mate. Yeah.
Got to get out of this room. Before we do, those of you who have been joining us for the last few months, thank you very much for your faith in us, I suppose, or your attendance in our show. As I said, in the new year, it will become the UK session, and you're only too welcome to join into that free as well. Thank you, Mai, so much for looking after us for the last few months, and you can tune us out right now. We'll catch you in the new year as well.
Fantastic.